Welcome. In this video, Zbcn 1100% bullish wave is coming. What is the reason? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
The presence of a bearish order block at the current price level represents a highly significant situation in technical analysis. These structures typically form in areas where the price has previously reversed sharply downward, and they represent zones where institutional investors or large players have actively placed sell orders. Therefore, when these zones are retested, they often act as strong resistance and play a critical role in determining the direction of the price. A bearish order block refers to the last bullish candle's consolidation area before the price broke down sharply. This block essentially represents a cluster of sell orders and a point where large investors exerted pressure on the market. As a result, when the price returns to this zone, it often reacts and resumes a downward move. However, if the price manages to break through this bearish order block strongly to the upside, it signals a significant shift in market sentiment. This block is like the bear's last stronghold. Once it is broken, it can be said that the bulls have taken control and the bullish momentum is likely to strengthen further. Assuming the price is currently within or right at the edge of this bearish order block, it indicates a critical level. The reaction at this point will be decisive for the medium and long-term direction of the price. If the price is rejected at this level and breaks down, it shows that the bears are still in control of the market. However, if the price breaks through this block and starts closing above it, the previous resistance can turn into support, which would be a very strong technical signal paving the way for a bullish continuation. In this context, the breakout of a bearish order block may signify not only a short-term upward movement, but also the beginning of a new trend. Especially if the breakout occurs with high volume, it indicates that institutional buyers have returned and its sellers are weakening. Volume is a crucial indicator at such technical levels because it's not just about the price breaking through, but also how strong and well supported that breakout is. A breakout without volume can often be a false signal, whereas a breakout with high volume usually represents the start of a sustained price movement. Additionally, breaking through a bearish order block often results in liquidity being drawn upward. Many traders view this area as a selling zone and place their stop-loss orders just above it. When the price moves past this zone, those stop-losses are triggered, contributing to the price's upward momentum. This dynamic can spark a short but powerful rally. If the price can sustain this move, a new bull channel may form with higher highs and higher lows, confirming the continuation of the trend. This breakout is also significant in terms of investor psychology, not just technical analysis. When a price level is tested repeatedly and finally broken, traders start viewing that level as a former resistance that's now behind them. This psychological barrier being broken shifts investor focus to higher targets. Therefore, the breakout of technical levels doesn't just signify a line or zone being passed, it marks a shift in collective investor behavior. This change creates a new wave in the market and can pull in previously cautious investors. However, the breakout of a bearish order block does not always happen in a straight line. The price may enter and exit the block several times before a decisive breakout occurs. This requires investors to be patient. Early entries can sometimes result in losses, so it's usually wiser to wait for confirmation and several candle closes above the block. Also, any positions taken at these levels should include a stop loss and proper risk management. In conclusion, the bearish order block at the current price level is a critical threshold. A breakout above this block could signal a market shift. This breakout indicates not just a technical development, but also a change in market psychology, suggesting that buyers, not sellers, now hold control. If supported by strong volume, it becomes a powerful indicator that an uptrend may continue. In such a scenario, investors can begin targeting higher levels and a new bull trend could emerge. Carefully monitoring and correctly interpreting these types of technical structures is one of the cornerstones of a successful trading strategy. Especially when such resistance blocks are broken, it opens the door to new opportunities and potential profits. But we can't base our analysis on order blocks alone. Let's now take a look at other metrics. Stay tuned.
MACD is one of the most powerful and widely used momentum indicators in technical analysis. This indicator provides investors with a major advantage in identifying the trend direction, momentum, and potential reversal points of prices. In particular, when the MACD lines move upward, it indicates that buying pressure is increasing in the market and that the price may potentially rise. The upward movement of the MACD lines is generally seen as a strong signal that a bullish trend may be starting and creates a positive sentiment in the markets. The MACD indicator is created by measuring the difference between two exponential moving averages, or EMAs. These averages are typically the 12-day and 26-day EMAs. The difference between the 12 EMA and the 26 EMA forms the MACD line. In addition, the 9-day EMA of the MACD line is called the signal line. The crossovers of these two lines and the distance between them provide clear information about momentum in the market. Especially when the MACD line is trending upward, it paints a favorable picture for both short-term and medium-term investors. When the price of a financial asset starts to rise over a period of time, this rise is usually supported by volume and momentum. This is exactly where the MACD lines help measure the momentum. If the MACD lines are steadily increasing, it shows that investors are taking long positions and that there is a growing sense of confidence in the market. Particularly when price movements are accompanied by upward momentum in the MACD lines, the reliability of this technical indicator increases even more. Therefore, many technical analysts and professional investors consider such bullish trends as buy signals. The upward movement of the MACD lines also shows that the trend in the market is gaining strength. This strength is not just about the price moving higher, it also means that there is strong momentum behind the price action. Increasing momentum indicates that new investors are entering the market and that existing investors are maintaining their positions. This in turn suggests that the bullish trend is being built on stronger foundations. Especially when MACD increases start during periods of low volatility, it provides important clues that the trend is in its early stages. Therefore, the rise in MACD lines should not only be considered a signal, but also as a reflection of deeper market dynamics. Also, the relationship between the rise of MACD lines and the price is often direct, because the upward changes in this indicator directly reflect the speed and direction of price movements. If the price is consolidating above a certain level while the MACD lines are moving upward, it could be a sign of a much healthier uptrend. For investors, such situations offer favorable opportunities to open new positions or expand existing ones. Especially if other technical indicators are also producing signals in the same direction as the MACD, confidence in the sustainability of the uptrend increases. The upward movement of the MACD lines also shows that market sentiment has turned positive. When investors start to believe in an uptrend psychologically, that belief is reflected in prices. This is also evident in technical indicators. When MACD lines consistently trend upward, it shows that investor confidence is rising and more buy orders are coming in. This makes it easier for prices to reach higher levels. In technical analysis, sentiment is extremely important, and MACD is a key mirror of that sentiment. In some cases, MACD lines begin to move before the price does. This gives the MACD a position as a leading indicator. That is, when the MACD lines begin to trend upward, the price may not have moved yet. But this gives investors an opportunity to enter positions early. Especially when MACD lines start moving from below the zero level toward the zero line, it is seen as a buy signal, and the price typically follows this signal shortly after by trending upward. Thus, a rising MACD not only supports current price increases, but also signals potential future gains in advance. Many technical analysts also pay close attention to the slope of the MACD lines, because it's not just about the lines rising, but how steep that rise is that matters. A steeper rise indicates that the momentum is much stronger. This suggests that the price may continue its upward trend more decisively. If the MACD lines are rising and also crossing above and diverging from the signal line, this is considered a strong bullish signal in technical analysis. This signal plays a decisive role in the buy decisions of many investors. In summary, the upward movement of the MACD lines indicates that buying pressure in the market is increasing and that the probability of prices moving higher is strong. The positive trend of this indicator offers a significant advantage for investors. These signals, which come before price increases, make it possible to take early positions and minimize risks. Moreover, rising MACD lines generally provide stronger confirmation when analyzed alongside other technical indicators. For example, if RSI, volume indicators, or trend lines are also giving similar signals, confidence in the sustainability of the uptrend increases. In conclusion, the upward movement of the MACD lines is a bullish signal frequently used and respected in technical analysis by both beginner investors and professional traders. This signal is not just a graphical interpretation, it's a holistic reflection of market psychology, investor behavior, and price momentum. Therefore, a rising MACD line should not just be seen as a technical occurrence, but as a strong and reliable sign that prices may rise. This positively impacts investors' decision-making processes and contributes to healthy position management.
The cup and handle pattern is a frequently encountered price structure in technical analysis that carries strong upward potential and offers promising prospects for investors. One of the most notable aspects of this pattern is that it takes shape after the price experiences a long-term decline, forms a bottom, and then gradually recovers to previous levels. A full cup pattern emerges when the price forms a U-shape over time. In a scenario like the one you're describing, where the cup portion is already complete and the handle formation is underway, it represents a very exciting turning point from a technical analysis perspective. The completion of the cup indicates that investors have moved past the prior downtrend and are beginning to apply buying pressure again. This shows that confidence is returning to the market and that the price now has upward potential rather than further downside risk. The handle at this stage is a short-term consolidation period that follows the cup. In other words, the price is taking a breather before its next upward move, establishing a stronger base. The handle typically forms as a slight downward sloping channel or a horizontal trend. Technically, the handle should not be too deep, as a deep handle could weaken the pattern's validity. When the handle nears its end, meaning the price finishes this minor correction, a strong upward breakout usually occurs. This breakout signals that investors are becoming eager and buyers are taking control. This breakout is the most critical phase of the pattern because once the price breaks this level, the cup and handle target is considered activated. In technical analysis, the target of a cup and handle formation is the distance between the lowest point of the cup and its highest point. This distance is typically expressed as a percentage, and in your example, it indicates an impressive 1,100% potential gain. Such high targets are often seen in low-cap or low-priced assets and can present major investment opportunities. However, for the pattern to be valid, certain technical criteria must be met. First, the pattern must mature over time. The cup portion usually takes shape over a long period, months or even years. This signals to investors that the price has bottomed out sufficiently and is preparing for a new bullish cycle. The handle forms over a shorter period, typically lasting several days or weeks. The breakout following this brief consolidation should ideally be accompanied by a surge in volume, as breakouts without volume may result in false signals. So if the price is currently forming the handle, the most important action is to patiently wait for the handle to complete and carefully watch for a breakout with volume. If the price breaks above the upper boundary of the handle with volume, it gives a buy signal to investors. This signal is quite strong because the entire formation is now confirmed and a target can be calculated and a strategy developed accordingly. As you noted, the target for this formation suggests a 1,100% increase. This is an extraordinary potential from an investment perspective. For example, if the price is at 0.01, a 1,100% increase could bring it to 0.12. This kind of gain is typically supported by not only technical formations, but also by fundamental factors. For example, a strong development process for the project, new partnerships, major announcements, and growing market interest can reinforce this technical pattern. Because no pattern guarantees a price increase by itself. Rather, these formations help investors identify key levels and determine when it might be appropriate to enter a position. Especially patterns like the cup and handle reflect market psychology very well. The period when the cup is forming represents a time when market participants are pessimistic and exiting their positions. Then comes a gradual recovery that shows the market is regaining hope and starting to buy again. The handle phase is a brief hesitation period following the initial recovery, during which the question, "Is this rally sustainable?" is commonly asked. When that hesitation ends and the price breaks out upward, investor confidence is fully restored and the price may rise even more rapidly. Another important detail is that the handle should be symmetrical or slightly downward sloping. A very deep or prolonged handle weakens the validity of the formation as it indicates continued uncertainty in the market. An ideal cup and handle formation completes with an upward breakout before the handle deepens too much. When this breakout occurs, it signals increasing buying pressure, the transformation of resistance to support, and the fact that investors have moved past indecision. Investors usually take positions right after the breakout in such formations. More cautious investors wait for a pullback after the breakout to enter a position. During this pullback, the price may touch the upper boundary of the handle again, and if it finds support there, the upward move continues. This confirms the formation and indicates that the path toward the target has begun. In conclusion, if the price has completed the cup and is now forming the handle, this means we're in the final stage of a major technical structure. Patience is critical at this stage. Once the handle is complete and the price breaks upward, the target of the pattern becomes active. In your example, this target indicates a 1,100% increase, which represents extremely attractive potential for investors. But for this target to be realized, the price must break the upper boundary of the handle with strong volume and then test that level as support. Such high potential formations are frequently seen in low market cap projects and are often completed during periods of rapid price movement.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.